This episode of Because Money is brought to you by The Value of Simple. It's a course and a book created by John Robertson, and it teaches Canadians to manage their money. Listeners of this podcast will know that John has all the answers, and you can get access to those answers by going to valueofsimple.ca and signing up for his course. It's awesome. It's the thing that taught me how to invest back when I knew nothing about investing, and I can't recommend it more. For today's episode, we're going to dive into a topic that I'm still learning a ton about, and that's really, really obvious in our conversation. We're talking about disability insurance. We're talking about the causes and the reasons why people look at it, and solving this problem of what you do if, something terrible happens in your life and you're not able to work. How can you plan for that financially? What is disability insurance available for, and why am I so afraid of it? So I hope you enjoy this conversation. I sure took a whole lot from it. Here are Sandi Martin, John Robertson, and I talking about disability insurance.
Okay, so I have a question for you. No, I don't. I'm going to start with an anecdote. I told Seth, we're going to talk about disability insurance on the podcast. And he goes, "Oh my goodness, it's so boring. Do you have to?" I said, "Well, maybe we won't say that we're talking about disability insurance. Maybe we'll just say, like, I was trying to be all clever. Like I could come up with like an opening segment. Like, how about this? Instead of saying disability insurance, instead, what would happen if tomorrow I went blind in both eyes? Like, what would you do? What would you do?" And it was a little bit interesting, but not sufficiently interesting to use as an opening.
I love that.
So I don't even know.
He's just he's working under the assumption always that like he's the most loyal listener. He's gonna listen. He's just like, I'm gonna listen, and I'm just gonna find it so boring. It's not that he wouldn't listen, it's just that he will and hate it.
The thing I'm gonna do.
If we can make it exciting, we'll make it interesting. So, I mean, here's the anecdote to frame it.
Okay.
Someone in your family gets sick. Let's say, Seth gets sick, or Mimi gets sick, or Kelly gets sick. Someone gets sick and goes in the hospital. And they're in there, and it's like serious, it's cancer, it's TTP, it's something. And then you're like, financially, I'd be better off if they died and never got out. Because we don't have disability insurance. That's how important disability insurance is.
It just got real. It got real fast.
Too fast.
0 to 60. Well, there you go, Seth.
Well, honey, we didn't get our disability insurance in line, so goodbye.
Yes. Yikes. That's like just ratcheting the stakes up to 100, but like, kind of, right?
Like a lot. Not even just kind of, like, actually for real. I remember the day actually when we were really responsible and we got our life insurance all put together. We actually, at the time we also did disability insurance. He was the one working it, so now it's all moot. We can talk about that later. But I remember looking at him and both of us thinking like, wow, if you were dead, all of our financial problems would be solved. Also, I love you. Oh, dear. Ooh.
This is like the flip side of quantifying a life that nobody ever talks about. It's like, it's really hard to put a value on a life. It's impossible. You're like, but then when you do, you're like,
sounds right.
I don't know. That money would be pretty nice.
Oh, jeez.
Okay, I've got a question.
Shoot.
Disability insurance is this huge thing. Like it's a huge financial tool. One could even like it's the reason why like Preet has his first chapter in his financial book is all about insuring yourself, specifically about protecting your income. And yet it's not talked about much at all, either on the small scale around the kitchen table. I've never been in a conversation where life insurance comes up every once in a while. Somebody gets life insurance and somebody goes, "Oh, you got life insurance. What is that?
Patrick.
How does that all work?"
There are a lot more articles on whole life versus term life or just life insurance in general than there are on disability insurance, for sure.
It's and even in the wider kind of financial conversation, it's just like, what is it about disability? Like Seth's not alone. He's completely right. People say the words like disability insurance, and nobody wants to talk about it, even though it fits a specific need and a specific kind of weak spot in all of our financial pictures in our lives in general. What's up with that?
I honestly don't know, but I'm going to answer that question with another question that I think I know the answer to. Do you have disability insurance?
I don't have disability insurance, and I promised John that I would have by the time that we recorded this podcast, and don't feel great about that. I have a real aversion to wanting to talk about this, even though it's something that I also have a curiosity and a fascination with. I don't have it, and I can't even really give you a good reason why. It's based on these kind of like not completely proven ideas that it would be really hard for me because of the nature of my income, and that is both half confirmed and half debunked by the conversations and research that I've done. Because I have, in the last month, talked to a bunch of people about disability insurance, and in a very unhelpful way, gotten lots of different opinions. The problem is what I've done is I've talked to lots of people in the abstract, and I haven't sat down with anybody and my numbers and asked if I can get disability insurance. And so I can steer around the whole thing over and over again. And I will say that, like, I think that there is part of my mind that says exactly what you were saying before. It's overconfidence in my ability to adapt, a foolish confidence in that stupid young person thing where you just don't think it will happen to you. And I acknowledge it right away as soon as you say it, that that's a dumb thing, and I would see it in somebody else. But why else am I dragging my feet? Like, clearly I do not have a strong connection to the real stakes of this issue. Otherwise I would have the answer of whether I could get disability or insurance or not answered, and then at least be looking at other options, which also, we can talk about that later, but like, because some people can't get disability insurance. Yeah. That's a thing. Some people don't qualify, and there is an interesting amount of research around, the different occupational classes that most insurance companies don't want to cover. And musician is often one that kind of gets classified there. Although I've talked to musicians that apparently have gotten disability quotes. And so that's not necessarily as cut and dry as it seems. So there are options to try to patch together some kind of coverage here. But like, I don't have a good answer. I don't have a convincing answer for why this is not my first financial priority, except that I don't want to talk about it.
Yeah, I have 3 answers. They're not answers, but they're 3
answers
extra
for me?
things. Yeah.
The answers for you.
No, for you. And also for me. It actually is for me as well. No, 3 reasons why it's still, another 3 reasons why it seems, I think, why it's one of those things you typically don't really talk about, and it seems like, I could just leave that off my list. First, it's gate kept in a way, right? Excuse the phone. It's probably my insurance broker. No, that's not true. So the perception is, if it's one of those things where you kind of have to give them the ability to sell you stuff if you ask for the information. So that's like one thing. It's like, do I really want that? So you don't have somebody that you have an established relationship with.
Yeah, that's true.
That's one barrier. The second one is time. And you wrote a very good article not that long ago about like, okay, well, as much as that might seem like a thing I'm going to do, it's not on my 1-by-1 goal sheet for the week. Yeah. We have all sorts of other things that have to get done. And you in particular, this is a very busy time for you. So you can not like, let yourself off the hook. It's fine. But this is a busy time.
It's a reason, not an excuse, I would say.
Okay, fine. And then the third thing is, I think there is a perception, and I don't think it's entirely unwarranted, that disability itself is a product that's quite opaque. So you're going to buy something you don't fully understand from somebody you don't fully trust, and from a company that you're not totally sure if maybe there'll be a way that they don't pay you. Do you know what I mean? Like, what does disability mean to you, and what will I have to do to prove that? Like, what kind of thing will I have to? Will people be following me around and surveilling me if I make a claim? Because I don't know. What if I can move my nose?
Yeah.
It's also just not that common. I mean, as far as I know, for freelancers or self-employed people, there are 2 companies offering it in Canada. Maybe there's more, but not that I'm really aware of. Whereas there are dozens of life insurance companies and lots of life insurance advertising. I've never seen an ad for disability insurance. Like, any awareness that I have comes from the personal finance blogosphere and from Preet's book. Like, that's where I learned about it and decided that it was important. And I mean, unless you have it from a group plan, I don't personally know anyone that's gone out and bought disability insurance. I mean, we tried, but okay, well, Sandy.
But not for me. So our disability insurance matches a life situation that we had 3 years ago.
Yeah.
And it doesn't match today.
Okay.
Unlike life insurance, which is like, okay, well,
Yeah.
is it going to be that different year to year? Right now, it's, like Seth is insured for disability from his own or any occupation after 2 years, but he doesn't have an occupation. So like, he's got a vocation.
He's got a vocation, a calling, all of those things. And he's excellent at it.
Superb.
But I don't think that the insurance company will care.
It's not a thing. No, it's not a thing that they pay for. So this is very interesting. It's happening right at a time where, because of the merger of my company and Julia's company, so it's coming, blah, blah, blah. So we're doing a lot of corporate work that has never been a thing that I've done before. Yeah. And I found something very interesting, that if you're a member of your local chamber of commerce, many chambers of commerce, get the S's in the right spot, offer group plans to members, which are, now, we just got a quote. It's not the best. It's not the best. But if you have no other way of getting, like, I could right now with my earnings history could probably go out. I haven't looked, but I could get disability insurance. Probably not for like blindness stuff. I feel like that I'm unqualified for that. But I could go out probably right now. I'm pretty confident I could get covered for the occupation that I do.
Okay.
But if there was a kind of a worry that wasn't available, I think that the Chamber of Commerce is not as great as it could be, is probably better than nothing.
There's words that have come up most in my conversation with insurance people over the last month is, this is probably better than nothing. I'm just like, it's tough, because I think that you're exactly right when you were talking about this kind of general distrust of the insurance industry, kind of low knowledge of the product, even within a sphere where people are really looking in finances and living in that world. John, you're totally right. Like, I've never seen advertisement for disability insurance. I've never heard any organization really trying to educate. Every once in a while, somebody will toss this out and be like, oh, you should really get it. And then you dig around a little bit and you realize that there's this golden goose of, disability insurance that some people have, so that if you end up not being able to work, you just will get 70% of your salary, or 66.667. I think that was the last number of disability things that I put into a program, over a long-term period, that really help take care of this problem. And you're like, oh, cool. And then you start to dig around, and it's just usually not possible to get in that shape. Or there's this idea that it's super expensive. People definitely have that idea when I've chatted with just your average person, to be like, oh, isn't that crazy expensive? That idea that like, that could be. And with life insurance, it's the opposite, where people are like, that'd be too expensive. And often with young people, you can get really reasonably affordable life insurance that can fit your needs. I don't think that's necessarily the case as often with disability insurance. You just stumble into a really affordable policy, or is that not true?
I don't think so. Well, affordable compared to what, right? Like, affordable compared to not having any income, I suppose, is the way that you're supposed to look at it.
I guess so.
So I'll give you lots of information about. No, I probably won't. But so back when I was in banking and we were selling things like payment protector on a credit card, or I have a deep distrust of the way that the product itself is framed as a, well, what if the worst happened? And so-and-so got it and then he died and his family's so glad that he got it, whatever, all of those kind of narratives around insurance are, right? But you are more likely to have some kind of disability. Well, actually, no. Those words are coming out of my mouth. You're actually more likely to die because everyone is going to die.
You're more likely to get a disability than to die.
But during your income-sensitive years,
Winston Churchill.
During the years where you're earning income and when disability insurance is like the thing, it's more likely, I suppose. Golly, I should have looked those statistics up.
I feel like the statistic is not like there's an important statistic to express about there being, you know, higher chances of certain things than you think, but I don't know if it's more likely. We're not saying it properly.
We're not saying it properly at all. That we are not using good probability language. John, you should use the probability language.
I think I should have done some more homework before we started recording the episode. But yes, my understanding is that during your working years, when you are young in your 30s and 40s, you're more likely to become disabled than you are to die. And there's also various levels of disability. So you could be permanently disabled by, you know, a spine injury on the job or in a car accident or whatever. Or you could be somewhat temporarily disabled. So, you know, not short-term disability, not like, you know, 6 months out of work, but like 3 or 4 years because you go through rehab after an accident, or you have cancer and it takes a while to go through your chemo radiation and build your strength back up and all that sort of thing. So there's lots of different sort of ranges of possibilities for disability insurance. And then also the severity can vary between your own situation. So, I mean, when I looked at our situation, we're in kind of a unique situation because we're renters in Toronto. So we have flexibility in terms of being able to move our house if something happened. And we have more space than we need if one of us was gone. So if one of us died, we don't need a 3-bedroom house anymore because we don't need another person's home office. Yeah. We could move to a 2-bedroom apartment for the remaining parent and the child. So that would cut down on the expenses. So the income would be gone, but also a fair number of the expenses would be gone. And we both work. So if one of us died, we'd probably be okay as a family for the remaining 2. I mean, financially.
Yeah.
Yeah.
Yeah. No.
Clearly.
No, totally. Yeah. Totally. We're just going to talk about the money sliver.
Whereas if one of us gets disabled, and I really shouldn't speak too much in the hypothetical because this did happen to us. One person gets out of the job force. We still need the space in the house. We don't want to move. Yeah. The expenses are still there. They're still eating. We actually have more expenses because now we need a walker and a cane and physio, and then it also increases the care burden because now you got to take care of not just the child as the remaining single parent, but also this other person that kind of needs you to do more to pitch in while you're also still trying to keep your full-time job. So your expenses, if anything, increase, but then you've lost the income. And so that's where, you know, I mean, we looked at this a couple of years ago, and I don't know if you guys, well, you two are familiar with our story. I don't know if our listeners are, but we looked at our situation a couple of years ago and said, okay, well, we don't really need life insurance because of what I was saying earlier, and because we also have a bit of a large emergency fund because we've been renting and investing the difference rather than buying a place in Toronto. And that's another long story of mine that I will try not to veer down toward.
We'll put a link under the post. Buy versus rent, guys. It's going to be a thing.
But we decided, you know, disability insurance was a need that we had to get covered. And so I have disability insurance through a group plan at my day job, but Wayfair does not. And so she went out to get a quote, and she's self-employed. She found an insurance broker, went and got a quote, and it was actually a surprisingly onerous process. She had to make several trips down to the office in person with documentation of her medical history, of the various medical tests she had in the past, proving her income with her various tax return statements so that they could show that there was a certain level of stability to her income. And after spending several subway fares to get down to that office, several hours over time, we ended up not getting disability insurance, and we don't know why. We don't know if it was something in her medical history or if it was because she was too close to being off mat leave, so she didn't have the income stability to show that as a freelancer she had stable income to qualify for certain levels of disability insurance. And then we were going to go and try again after a year, because then there was one more year since mat leave of sort of level income, where we thought, okay, that might make the difference. And then she got sick and was in the hospital and
needed disability insurance.
And yeah, it would have been nice to have some disability insurance at that point. So there was like some support. I mean, we have our own savings. We have our own ability to cut back on some expenses so that things are not terrible. And she's not 100% of the workforce.
Yeah.
But, we're going from working, dozens and dozens of hours a month down to working a number of hours on a month that you can count on your fingers in a month,
Yeah.
not in a day like some people do, but in a month.
Yeah.
That's not a lot of income that's coming in then from her side. And that's all we got. So, I mean, there's a little bit of sickness benefit from EI that helped a little bit there. And I don't know if we want to go down this road, but a very quick rant about EI is that you still need an emergency fund, because by the time EI processes all your stuff and backdates everything, because of course they expect you to apply like the day you're admitted to the hospital and completely unconscious, they'll fix it eventually down the road to backdate it. But by the time the EI check comes, like, you're already several months out. So you need to have that emergency fund to bridge there.
Yeah.
That's almost always the case, even with a group plan and even with personal disability. Like, I know people who 2 years down the road are getting retroactive disability payments because that's how long it took to make their claim and establish their actual disability. And like, having disability insurance is great. In some ways, it's there to make you whole again after you've already spent your own resources.
Well, it's probably a useful thing just to kind of spell out the differences in talking about short-term disability versus long-term disability, because there's some people that really think that, oh, I've got disability insurance through my work, but it's actually not long-term disability, it's short-term disability. So it'll cover you for 3 months or 6 months. It's built for a whole different problem than long-term disability, which will not cover you for 3 months. Often there's is it usually 3 or 6 months or something like that before it kicks in?
Often 3, but sometimes 6.
I thought 3 is the thing. Yeah. So it's like, it's not for short-term things. So it's, I think about this a lot. It's about like, which problems can you actually manage on your own and which ones can you not? And so like, especially as a freelancer and a variable income earner, it's like 3 months. I'm used to planning for 3 months of dry zone. Like, I know what that looks like. And I would say for most people, you can figure that out eventually. You can build it, and it can't happen in a day if you're just getting control of your cash flow, but you can save up enough so that you can live on it for 3 months. Call it an emergency fund, call it, whatever you want, so that you can buffer between those things, whether you have short-term disability or EI that will eventually cover that. But when you're talking about a problem like the potential of 15, 20 years of low to no income, that's a problem that I would say is next to impossible to solve just with grit, grind, and savings. Like, it's not saying that you can't figure it out with a combination of, family support and changing your life and like changing expenses and all that stuff, but you can't, I don't think you can be like, oh, if you can just invest the difference, like that's a huge amount of money to solve. And so that's the kind of problem where long-term disability fits in. And it really does fit a need where if the financial tools are for those times that we cannot cover them, life insurance is the same thing for specific situations. It's so difficult to plan for, covering all these things and be able to support your kids and all this stuff in certain people's family situations, that life insurance is a great tool to come in. It's so difficult to imagine. John talks about this all the time, like storing money underneath your mattress enough to cover yourself in retirement. So the idea of investing in the market and capturing those gains, that's what that tool is for, to help, cover this problem, which is really hard to solve just on your own in your own personal economic world. But it's tough because it's not a tool that's available to everyone.
So my experience, or Seth's experience, I was there in getting disability insurance. He was self-employed. Our insurance broker is from Niagara region, I want to say, which is
Close.
3 hours away.
Farther,
And he
I think.
drove to our home
Wow.
multiple times. So, but we applied. He got fully underwritten, of course, because it was personal or like private anyway. He got fully underwritten, and then it excluded if something happened to his back, like he threw it out or whatever because he had back problems. Because he disclosed that because that's what people do who are used to disclosing all the things. There wasn't even a moment of thinking, oh no, we wouldn't qualify for that. Of course we're going to qualify for that. Like it didn't even occur to me that was a thing that you could not qualify for. That was back in my naive days.
Can I ask you,
now,
both for Seth and for you guys, John, for self-employed, you prove income by showing a number of tax. I'm always curious about how the benefit gets calculated for self-employed people, because obviously you can't just say 70% or 66.667% of your normal monthly salary. Do you guys have a sense of that at all? Of what that was done? Like, is it an average of the last few years or broken down?
It was very similar in my mind, if I can recall correctly. It was very similar to an application for a mortgage when you're self-employed. So 2 years of earnings history.
Okay. It's that's the standard for self-employed people. Same thing.
Yeah, and there was no real ability. Like I remember this from mortgage days. Like the self-employed people would come in and say, "But that's not my actual. Like my line 150 isn't for real because I have all these other expenses." And very similar to that scenario. The insurance scenario was, well, your line 150 is real. Then we'll just have to assume we're going to insure you based on line 150, not these expenses that we know you have, but of course, realistically, we can't prove and can't include in your income.
Yeah, and it was the same thing for us. It was a certain number of years. I can't remember if it was 2 or 3 that would average out based on your tax return data of how much your net income was from the sole proprietorship. And then the insurance products were available at different rates: 65% replacement, 50% replacement, own occupation versus all occupations. And you had a few choices there, and we tried to get quotes on all of them. And at the underwriting stage, can't remember exactly what we tried to get. I think we tried to get 50% replacement of any occupation, and at the underwriting stage, it didn't come through.
Okay.
I'm just gonna squint and shake my head for a while.
Yeah, it's a frustrating thing, but I think it's worth kind of talking about too, because it's a problem I've been tossing around in my head about what do you do if you don't qualify. So what if you do and you don't do like Chris and you actually go through the process and you find out for sure, do like John. Whether you qualify, be like John. That's actually, we should rename the podcast maybe.
Be like John. Done.
Be like John, not like Chris.
For those $50 a month patrons, t-shirt. Be like John.
Boom, boom. Well, what are the tools that are available? Because I was playing around with trying to say, like, can you patch together a version of disability insurance with other insurance type products? Can you use critical illness insurance, which is an interesting product, doesn't cover everything, but it's an interesting stopgap for some of those problems. There's also a really cool product that Julia showed me. I don't know, did we talk about this, Sandi? Which is through Manulife, called the Synergy Project. Not Project, Synergy.
That would be cool though. That sounds like Captain America would know about it.
Yeah, right? The Synergy Project.
With Manulife.
See, Seth, it's cool. Insurance is fun. Whee! Which is a pool product that's life insurance, critical illness insurance, and disability insurance, kind of in a out of the same pool of money, but you don't apply to it through the disability. You don't underwrite as disability. It gets underwritten as life insurance, so more people can get it. Apparently, you can get it without an actual income. You can apply to it. Yeah. So
your homework is to find out.
I've done so much homework, which wasn't my homework, which is I've learned lots of things about generalities. The biggest, I always like to think about the tiny things that stop you from doing big things, because it always feels like a stupid thing that's actually getting in your way. And like we were talking about all the big things that might be getting my way. Honestly, it's the fact that I don't know who to call. And John already sent me 2 links of companies to call. So he's already done his job. So, but this is still the excuse that I'm getting hung up on, which is like, I know a couple of insurance brokers in Manitoba, like that are old friends, and at least I have some kind of relationship with them. It's hard for me to call a stranger or a company, or I'm having a bit of a block about that, even if that's not the real reason. I'm having a block with being like, the general trustability of the insurance industry is not great. I just want a recommendation. I just want a recommendation from somebody who's like, I know this person. They brought me a cake on my birthday. They're not terrible. And that's what I want. Like that's, yeah, it's not.
I know a person. He's in Niagara. We can
seriously.
Yeah.
If you drove up to Gravenhurst, I'll drive up to here.
He did it for my parents. I know he did it for my parents. We know each other. So, okay. So if we, so there is this idea that there are possibly, like through a chamber of commerce plan or through some group plan, like John had found something really interesting, some group plan for self-employed people who, or no, people who share office space.
Yeah.
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 So there's that, or there's this Manulife product or whatever. So, but let's talk about in the absence of actual insurance type product.
Okay.
So tomorrow, if you're preparing, let's not do the tomorrow if it happened. Like if you had time to prepare, what are the things that you could do that we would not call disability insurance, but that are your own disability insurance? And we mentioned a couple of them, and these actually happen to be many of the same things that we would talk about in retirement planning. Like, so if your income went down, could your expenses go down, and how quickly could they go down?
Yeah.
And how confident would you be in being able to keep them down? And obviously this is very short-termism, because of course, if you're facing 20 years of no income, and let's say you don't have a partner or you don't have family resources around you, there's a limit to how useful reducing your expenses is going to be.
But it's interesting to note too, that we definitely have to talk about, the basic things and kind of behaviors and habits and stuff that they can plan to, but there are safety net things that can come into play as well for people that feel like they're completely left out in the cold as far as, disability stuff through CPP as well. Yes. Mm-hmm. There's a disability benefit that can kick in there. And
they have like fully disabled for that. So I was mentioning that, it's a big adjustment for us because she's gone from making approximately the same amount as I do per year down to working just a few hours a month. But that few hours a month is enough to not qualify for CPP.
Yeah, right. It's the same. It's this classic safety net issue, right? It's that there's a whole bunch of people that just fall through or don't get caught in the net and that are left out in the cold because they're halfway in between the most vulnerable and people that are fine. Yeah. I'm sorry, Sandi, though. I shouldn't have, that thought experiment is a really good one because it is that classic, it's in it and it deserves actual thought and me not moving on to talking about CPP. I didn't mean to, but that's what it ended up being.
Don't we all just move to CPP eventually?
Not all too early though. Not if you can afford it. Yes. So it really ends up being the same kind of basic thought process exactly that, like retirement or that John was talking about when his decision about life insurance, it always comes back to that same thing, right? It always comes back to like, what are your core control and your core resources, which is, full net worth stuff too. It's community. It's being like, who am I going to lean on for support in that situation? Like, what do I have a community? Do I have a family that could take care of me? Like that's obviously most people don't want to be a burden on their families, especially for a long term. But like when we're just talking about realities of situation and trying to count assets, it has to be something that's considered. That, what would realistically happen if you could not work for the rest of your life? Things get stark really quickly, but like John started off at the top of the episode, it's like when you spell out that problem as starkly as that, and it can feel that stark when you're in that situation, everything's on the table. So if you are going through the thought experiment saying, if everything is on the table, like what is possible? How flexible are you? And this is another thing where John, in your whole rent versus buy conversation, the idea of the flexibility to say we could leave tomorrow. We could,
60, basically.
Right. Don't leave your landlord tomorrow. He's going to, they're going to complain.
But yeah, it's a relatively short time with relatively little impact, just up and leave.
Yes.
And, so that leads also to then where you're going to go. Well, if it really came down to it, keep good relationships with your parents. So, I mean, if you, Chris, got injured or whatever tomorrow, next year, would you be open to moving back to Manitoba and relying on your extended family out there?
One half of my brain says, no, I couldn't do that, but I know I can. Like the truth is
that's North America talking.
When we were talking about this with a bunch of my friends too, it's just like recently, it's like that is a huge privilege that I have. I do have a very close extended family in Manitoba, not just parents, but a close relationship with cousins and aunts and uncles. There is a safety net there that I know is there. And yes, it's going to get crazy complicated, especially if you're talking about support over a long term. But yes, I know that if something terrible happened, if, Mimi died in a fire and I was terribly maimed and I needed constant care, look, we're in it now. I could go back home completely. And there would be people there that would take care of me out of pure obligation and love. It's the same thing. And so that's got to be in the equation when you're at least thinking it through. It's not a reason not to get disability insurance.
No, and it might be a reason to hurry up and get it. So I mean, right now, out of paper. Start writing. Dear Aunt Beatrice, the reason that I am planning to live with you if I ever get injured is because I could not make the time in my day to get a quote for disability insurance.
This is...
Hope I never have to follow up on this. Love, Chris. Stamp, send.
This is another chapter of the John send an evil letter to
your aunts, yes.
I will never tell you who I am related to. This is
my
awful.
Aunt Beatrice is going to get a terrible letter in the mail. But
or you could just finally get off your butt and get that quote, and then you don't have to write that letter as like, this was my fallback plan, and that's the reason that you ended up here.
Okay.
Yet another important. I have to say though, because it's worth noting that it's such a good. I was going through this thought experiment for a completely different reason, and John has taught me an important lesson about myself. But the reason you think through this is for that exact reason. It's to understand the stakes. It's to understand, just to really kind of live in that moment and to say, yeah, what I thought we were doing was talking about, okay, what would even happen? Okay, what are my tools? What are my resources? But yeah, also, what is the cost of those like last case scenario, last resort kind of situations. And then when you look at that premium amount, you have a context to put it in. If you're saying that it's $500, $600 a month, you can say, look, $700, $1,200 a month. I don't know.
Lower.
300. Man, this is a terrible game.
Plinko, let's go to Plinko.
Okay. When you're looking at that premium amount, which is somewhere in between zero and a lot, you just have a context to put it in. It's not just a money thing. It's really saying, what does this investment into this tool, what is it going to keep me from having to resort to? And what is it going to help my people around me? That's kind of a really good and hard-hitting point, to just be like, look, it's not just about you. If you get disabled, it's really about your support network that is going to, you lose self-reliance. People have to take care of you. And then there's adjustment, not just for you, it's an adjustment for your whole world.
Okay, so it's coming down to, clearly, what are the things you actually really could do about finding kind of a conventional insurance solution? So actually just do the things.
Yeah.
It's also, what are the skills that you could develop? And here's where we're going to use the word side hustle, and we're all going to barf a little, except for John, who has like 40 plus 3 full-time jobs. But so what other skill, this is kind of another insurance avenue. What kind of skills could you develop that you could still do even if you couldn't do the thing that you could do. So like when we talk about any occupation in traditional insurance coverage, like my occupation involves doing this in front of a computer, either talking to you guys or talking to clients or typing things. I always, and this is my job, I do this. Okay, so there's a lot of ways that I could do this if I couldn't move my fingers or didn't have arms or I lost my vision or substantially all my vision or whatever. Like there's a lot of ways that I could still do this job. So, but so there's a lot of people that don't have jobs like that. And like, heaven forbid that now what I say is one of the ways you could insure yourself against income loss is developing a whole other set of skills. But really take a minute to think about, okay, so what are my skills? Could I add to my disability insurance by developing a skill for something that maybe doesn't necessarily need the full use of my body?
I think that that's fair. I think that one thing that I point out, because this was pointed out to me actually by Julia, was that, you know, because I was talking about critical illness and about how people are most afraid of the big diseases and getting disabled by, you know, those big diseases. But the most common things are accident and mental health. And I will say that, especially in the case of mental health, that's something that it doesn't, and, you know, it doesn't make your point any less valid. But it's just like when you're dealing with really serious mental health issues that, you know, lay you out for a long time, there's just not a lot of jobs that, but maybe every situation is so different that your case still applies. But I think that it was an interesting point that I hadn't thought of about being like, it's worth taking a look at the kind of disabilities, rethinking disability. Sometimes we think, oh, it's the fact that I can't walk, or, you know, you think about that thing that you're most afraid of, and it's not always that. And to kind of look at the stats and just kind of to open up your mind a little bit to say, to remember that mental health can leave people disabled for long periods of time. And it's definitely an issue that, and that's something that you can't get. It is covered under some long-term disability, but it's not covered under things like critical illness or accident, conventional accident insurance. And just to kind of, so that you, within this whole idea of planning, that you're kind of taking the information into account about what that could look like. Although these are tough thought experiments to have, guys. Like, do we really expect anybody? How do you put yourself in this? How do you start that thought experiment of putting yourself in this position? Like, how do you even, like, John had a good idea already, thinking about family and writing letters. Like, that's a really practical way to actually think about, you know, what would happen and straight on. Like, it just, are you supposed to imagine yourself? This is the problem with insurance. Are you supposed to imagine every terrible thing that could happen to you and try to think down every avenue what you would do?
I don't even think you need to go that far. I don't think you have to say like, okay, why would I not have any income at the beginning? I mean, to put you into that scenario, it's for the next 3 months, you have no income. Well, now what do you do?
Yeah.
For the next 6 months, you have no income. Now what do you do? It's triage, which is something that we do anyway when we're designing infrastructure and we're talking about what's the next right thing to do with your money.
Totally.
One of the things you have to do is say, okay, you know, what would you cut if you didn't have income for 3 months or whatever that is, right? So I don't think you have to talk about why you don't have income. I don't think you have to imagine all the worst case scenarios. Although for some people that might be the, you know, depending on who's dependent on you or who you're dependent on, that's a pretty good avenue. You don't want, I mean, if we're not using it to kind of leverage the sale of a product that somebody may or may not need, it's not pulling on people's heartstrings for, you know, filthy money reasons. It's what would happen? How would Seth cope if we didn't have my income, but I needed some kind of care and could not take care of the kids or pick them up from school on my own and take care of them through the weekends?
Yeah.
That would be not awesome. We have, and we do. I can go through the list of real, not just net worth assets. We're really, really lucky with a lot of those things. We're really lucky in that we have a pretty good like financial triage system already in place. We already know how we spend our money. Like, we're starting from a position of strength, and yet there's not a lot that we could do to skill or triage or life flexibility our way out of the fact that we have 3 kids, and we have to live somewhere, and so, and he's not in the workforce right now, although he has lots of skills. It would take some time to turn those into money. So,
and vocation would have to be replaced. Like, it's not like, you know, he if he goes and works and you aren't able to take care of the kids, like there's still a vacuum being formed there. You know, it's
get thee to an insurance broker is I think what you are saying.
I think that maybe there's a code date that could be made there. Yes.
We could come up with some kind of letter to our Aunt Beatrice situation.
Yeah.
If you and I both don't have disability insurance. Oh.
Yeah, I think that we should probably set the doomsday clock on that one.
I think so.
Obviously, it wasn't enough to just say that recording the podcast since I'm here. Maybe it's the release of the podcast, although that's in a week and a half, and this week is pretty crazy. Sorry, dear Aunt B,
I'll tell you, okay, so here's a plug for financial planning. I'm working with a financial planner now, which is great because I know her very well, and her name is Julia. But one of the things one of the key motivating factors was, this is one of those things that you're always trying to talk about what's the value proposition of financial planning? Well, one of them is, I have somebody that knows my finances inside out and can say, on your checklist of things to do in the next 3 months, plus she can contact me by Slack like every 5 seconds of the day. Did you get disability insurance yet? Like, I have somebody to whom I am now accountable, not just, which seems so silly because I am accountable to the imaginary scenario that we just talked through. That's a real thing. I'm really accountable to the 3 little, feral children in my house and the man that brings me coffee. Like, I'm accountable to them, but somehow being accountable to Julia or a financial planner, it feels like more of a thing that I should get on.
That's funny.
And that relationship is also one where she can identify blind spots that you might have. So, I mean, you probably sort of knew that disability insurance was a thing that you eventually get around to, but if you weren't you might not have thought that. You might have been like, oh yeah, life insurance, I've got that on my to-do list because, I got some of those kids coming, and that's what new parents do, is they go and they get life insurance, and then it's like, but did you get disability insurance? You go, or
no,
whatever hole you might have, that can be the value of financial planning and sitting down with someone.
Actually, if we want to go back to disability insurance just for one moment, to cost, Seth's I think is $158 a month. And then he's covered for $1,500. No, $2,000 a month. Again, totally useless, totally moot point.
No, but
it wasn't. I mean, and he was.
It's not a moot point because this is one thing that the general population has a very low idea of what the cost of any insurance is, whether it's life or disability. Just like even what a range is. Like, did you hear me quote all the prices of disability insurance now?
That was crazy.
I've seen premiums. I've seen tons of premiums come through, and yet there's still something in my brain. I've seen lots of people's policies, and yet my brain is like, 1,200. I don't. How much is this magical thing that will protect from this thing? It's crazy, and it's just it is. This is why you go in and get a quote, because everybody is different, and there are, even though the magic formulas are very much formulas, people fit into them in different ways, and that's $150 a month or $2,000 of tax-free income if the terrible thing would happen. That's not hard to justify in the old brain.
And obviously it would be a rate, right?
The great way that Preet framed this in his book, which is, would you rather have $50,000 of income and zero if you get disabled, or $49,000 of income if you're healthy, and $30,000 if you're disabled?
Yeah. But it's funny, especially since, like, in the world of freelancers, yes, but especially with artists, this is not something that the vast majority have, and yet it's just another tool in this variable income problem, right? Like, they're trying to solve this all the time, of being like, okay, 4 months in the future, I'm not going to have that, so I need to shift this over there. And it's like you're shifting income all the time. And just insurance in general lets you do that in the best possible way. Just being like, hey, one payment every month, level, you're just going to do this, and we're going to cover you. We're just going to give you that smooth, even feeling, that consistency of payment and payout that you have in no other aspect of your life. but it's also what makes me doubt whether they would give it to you in the first place because of the no aspect of it in any part of your life part of that sentence. Anyways, maybe we should do a follow-up when I finally go to an insurance broker.
Definitely.
And I learn the answers to these questions instead of just posing them into a vacuum.
Or to us.
Yeah, right. Sorry.
Same.
Here. You
Same,
guys are
same.
here. All right. That's all we've got for you today. If you liked what you heard, head over to iTunes and give us a really good rating. That really helps people find us. That would be awesome. And if you loved what you heard, why not check out our Patreon page, patreon.com/becausemoney, and lend us a little support so we can keep doing what we're doing. I am Chris Entz, and you can find me over at ragsToReasonable.com. I'd like to thank my partners in crime, Sandi Martin, who you can find at Spring Financial Planning, springplans.ca, and John Robertson, who you can find Value It's Simple or his blog, Blessed by the Potato, which is holypotato.net.